Well, good evening, all. Ira Epstein, and here we are with your financial market update. And this update is for the evening. And we're sitting here now on Thursday, the 18th of January, 2024. The time is actually 6:22 p.m. Central Time. Have a great evening. Want to remind you that our 30-day sale, where I compare the price of my research and lowered it by 50% to make it equal to cups of coffee. That was the idea here. And the coffee, you drink it now, 6 hours later, 7 hours later, it's gone out of your system. This is going to be with you for 22 business days. I've been putting out videos because we've been getting so many new subscribers explaining with more detail in the morning how the charts work and what they do. So a normal 15 to 18 minute videos become 30 minutes. That'll change now that the sale's ending and everybody's is in if I call it the groove of what we do. If you want to get part of this sale, it's really simple. Just move your cursor to the top here. When you go and sign up for it on the website, you don't need a discount. It'll take care of everything for you automatically. What I'm not honoring is if you're a current subscriber, let's say to the morning futures and or the spider, and you cancel it right now and then you try to buy it for this half price, I'm not going to honor that. But if you have one of these subscriptions, you want to add another, you can. If you were a subscriber in the past, you want to come back, that's phenomenal. And obviously new people. You have a good one. Remember, move your cursor to the top there or iraepstein.com. That's the way to get to us. So today I was writing about the markets and going, I'm confused. And, I'm confused often. But the confusion comes in. I look at the Mideast. Pakistan and Iran, tit for tat, they're attacking each other. I don't know if it'll escalate or not, but that's going on. The U.S. is attacking the Houthis. That's how you want me to pronounce it. I listen to you all write me. I call it Houthis, but it's Houthis. I get it. I know what you're saying. We claim every time we attack them, we apologize to them. I don't know if you're aware of that. The Pentagon did it again today. The apology is we're not looking to go to war, but you have to stop what you're doing. Otherwise, we have to keep attacking. So we're sorry we're attacking. First of all, why are we apologizing? We're not the ones setting the Red Sea ablaze or trying to do that with drones and missile attacks. And the Houthis are saying now, the Houthis, let me put it the right way, Houthis. The Houthis are saying to themselves, we're going to develop more military might and keep coming at you. And we keep apologizing. We are so scared, of the Biden administration is so scared of using force. What else is going to happen there? I mean, you've already got Iran and Pakistan going at each other. We don't know if Saudis will be attacked or not. The U.S. keeps threatening Iran. Iran doesn't give a damn what we threaten them with. They're going to do whatever they want to do as they want to do it. The only thing Iran would care about is if their oil fields got blown up. That would get their attention. I am not saying do that. Please don't think that that's what I'm saying. But that would be an attention getter. And of course, it would set the world on fire with oil prices. And nobody wants to see that, including and starting with me at the head of that line, right? I don't think there's a way to stop Iran from doing what it wants. You can't stop them with nuclear. They're going to develop what they want, how they want, when they want, and they're going to be the mischief people in the Mideast. You got to live with it, deal with it, however you can, and I'll leave that to the smarter people. My point is, away from politics, because I don't want to be a political person, the market's stuck in this. The market's also stuck that it had a November and December in the financial markets that were powerful to the upside. And instead of a big correction afterwards, we're just sort of drifting sideways. Yeah, a few markets are doing other things. You've gone back up in the 10-year note to 4.14%. So you're back over the 4. Demonstrably stronger. We saw the Senate and the House agree to a stopgap bill tonight. So that is done. We will have a government until at least March 1st, if not March 8th. Now the conservatives have to decide how much can they pressure without throwing out of office the Speaker of the House to get something done. Time will tell us what that's going to do as well. All this going on in the stock market still very strong. I mean, they're going to write books about this because it's pretty crazy. When you look at the S&P, for the week, it is down 0.4%. It's basically unchanged on a closing basis. You went up, you had this phenomenal run-up from the end of October right up here, and all you've done is drift sideways. This is consolidation. There's nothing yet bearish about this action, I've got to tell you. I would have thought more of a correction would set in. What's the chart pattern? It turned bullish today. Now you have higher lows and higher highs again in the market. Whoa. Where? Right against the 18-day average. You've been there and you've been playing at this number, honestly, since back here. If you really think about where you're at since the beginning of the year, January, how many times have you hit this 18-day average? Maybe it's better to ask how many times didn't you hit it? And if you do that, I think one. It's pretty amazing. It's just hanging right in there, and you have to notice these things and pick up on what they're doing. Let's assume the market wants to move. Well, maybe it gets to the upper Bollinger Band, but something else is really what's at work, and this is my point of this long dissertation tonight. I see a sideways market action that often churns your account. You look for the market to follow through up or down, and it doesn't happen. It's often accompanied when a market gets overbought or oversold and isn't embedding. I'm not going to go through what embedding is. I've done it for you over and over. That's where you're at. You're in a crunch where the market's just spinning its wheels, literally in the S&P against the 18-day average, refusing to get up to the upper Bollinger Band or the lower band. It got oversold, then it got now overbought, and it's gone nowhere if you really study what the market's doing. The NASDAQ is getting strong again. The tech stocks caught on fire. I don't know if you watch SOXX, the chip ETF, or NVIDIA. I do. And I've actually got clients in both of those on my Spider ETF videos if they wanted to follow those trades. And $17, $18 jump today in stocks. Lower low, higher high, not a trend. Again, a market that since the beginning of the year, you had one break right at the beginning, and you've basically hung at that 18-day average of closes. In the Dow, it's more bearish than bullish. This is a more normal chart. You've had a correction. It found its support at the Bollinger Band. It's not in the same story picture as the NASDAQ and the S&P. And the bearish market is and if you're a trend follower, this is the one that's been in the trend. It is the Russell 2000, the one that so many analysts on CNBC come out and they go over and over. Yeah, I do think it's time that we step in and we can buy the low-price cap stocks. They're ready. Sure, they're ready. They had an end-of-the-year rally. That was great for all those analysts that called it. But now that that's over and interest rates are gradually climbing again, that's the enemy of this particular division. In the 10-year note, look at how you've latched onto that lower Bollinger Band and you just keep dropping. As you drop, you increase interest rates. This is an inversion market. So the lower futures go, the higher real rates are going. And you've got the same thing starting now in the 5-year note. Admittedly, both are in oversold territory and void of a trend, both of them. You have higher highs, lower lows, as you can see. In the dollar index, you're pushing this market, trying to make it go to higher levels. A while back, we were talking, could you get back to the 100-day average in green? But to do it the way the market fell in December. Remember, in December, you had financials going up as interest rates were declining and the dollar was falling. As we magically rang a bell on January 1st, this game changed. And suddenly the dollar started going up and interest rates going up. That got me, I am confused because you would think stocks would be looking at that, fighting that. Certainly this rally in the dollar and interest rates has put pressure on the metals. We just covered that in the other video. So I see that. But this one now, if it wants to work higher, the 104 area is still a very lively target. It's way too overbought. As one of my subscribers in the mornings, I would tell you, you don't deploy new money in overbought markets. They either embed or they correct. You wait for one of the two. In the euro, if the dollar's going up, this is going down, and it's hit the Bollinger Band and bouncing away, and it's oversold. Again, you don't deploy new money in that one. In the British pound, you're just swinging sideways market. Look at how often you've been hitting the upper Bollinger Band down to the lower finally. That was yesterday. But it's basically a sideways picture. It's not a trend like you had going on back here or an uptrend that kicked into the market over here. Now you're getting the sideways action out of this market, which makes it very difficult to want to even trade it. We then get to the Bitcoin, and I feel like $1 million. Because up here, I told my clients, my subscribers in the morning videos, which they were in the market if they were listening, I called it a concept trade to get in at 38,000. Part of it come out at 42.5 to 45,000, and the balance at 48. And now you're down here. And I realize what's going on. All the hoopla came out of the market. And we had a tip-off when on X. Remember, that's the old Twitter. Somebody hacked the SEC account and said, okay, we're approving, and it looked very official, we're approving X amount of ETFs and blah, blah, blah. And the market only went up to 48,400. The next day I said, even though it was quickly taken off, that was how the market reacted. I said, the hoopla's done. You got it. You don't want to play this. Be careful. That's experience, by the way. Well, it's now $9,000 later. I did my job. Now we look at Brent WTI. You would think, I would think, that the Red Sea event would make Brent stronger than WTI. It's not the case. These things are narrowing in as the market is going right now. And when you look at the chart action, remember I said the sideways action that's confusing right now? You don't think this is sideways action? You don't think this is sideways action in a market? Not really so in heating oil, more of an upside, but running into a big buzz at the upper Bollinger Band. Momentum up, trend is still up in this market. A little more cold weather probably. But Nat Gas, if you looked at Nat Gas, they were supposed to take out 100, or the market wanted to see 165 billion cubic feet taken out. We took out 154, I think it was. That's bearish. The market reacted accordingly. You could be coming back down into the 221.5 zone. What I don't like is if you go short, this is the only thing I don't like about it. At 246, you almost got to risk $20. That's an awful lot. I'd like a better chart setup before I tell traders to risk that. Each 10th of a cent is worth, I think, $10. That's a lot of money in the big one. So I'd be a bit careful here as to pressing it, but I do see the trend is down. So that's where I'm at. It's been an interesting week. I have to tell you, coffee treated us great. Not only the sale, but I had last week coffee trade and this week, and those are the only trades I've made in the past week. They were great, and I'm a happy camper. Again, if you want to take advantage of this pricing, IraEpstein.com research. Move your cursor to the top. It ends at midnight Central Time today, which is Thursday, January 18th. You have a great evening. I'll catch you in the Spider ETF wrap-up. Take care.